Hey guys, so let's get into it. The S&P 500 just closed at a fresh high today, while one of the biggest chip stocks in the world got crushed. The Fed's own forecast says a rate hike could still be coming, just two very different stories on the same trading day. Let's break down exactly what moved the market, technical levels to watch on the SPY, and what you need to know that'll actually matter for tomorrow. So let's get into it. And I just want to clarify, guys, this is not financial advice. I am not a financial advisor. This is just my opinion on the stock market, and any information obtained here should be used for educational purposes. So let's get into it. All right, guys, so let's get into it. The SPY here closing at 754.81. We are right here at this top end of the resistance. This previous resistance right here, we have broken out of this daily candle downtrend here that we were going. We broke out right here, retested it, and now we're trying to continue to the upside, but we have a lot of resistance right here at this level at 754, 755. Above that, we're looking to test the all-time high, which is around the 760 range on the SPY. So those are the levels. We're still above the 20 moving average and the 50 moving average. On the RSI, we do look like we are trending upwards on the RSI here. So a good chance we do either come to try to test this all-time high. Whether that makes a double topping pattern is yet to be determined, or we break past this to continue moving upward. Now the rest of the tape. So the NASDAQ composite closed up about 0.6% at 26,269, a new closing high. It's driven almost entirely by Apple. The Dow added about 150 points on a blowout BlackRock earnings report. Small caps, the Russell 2000 basically went nowhere today, which is actually quite important to tell. So we'll talk on that a little bit later. Now let's look at the VIX here. So the VIX closed near its lows for the week, around 16. A low level of fear priced in, which matters given everything that's happening today. The 10-year Treasury yield eased about 4.57%, down from 2 months high 2 days ago. The dollar index also slipped for a second straight day. Now looking at commodities, oil barely moved. WTI just under $80, Brent under 85 despite an active war overseas, which is next. Gold pulled back about 0.6%, just above 4,000 an ounce. And Bitcoin was the standout, up over 4%, closing above 6,500. So now looking at the Iran war. So looking at the Iran war here on what's going on. Story number one, you need to know the US and Iran are still actively trading strikes. The US hit targets near the Strait of Hormuz for a second time today. Iran retaliated against the United States military assets in Kuwait and Bahrain, and Trump is now openly threatening to hit Iranian power plants and bridges, just like he did before a couple weeks ago, if we all remember that. His words that he says next week if Iran doesn't come back to the table. But here's what's strange. Oil basically shrugged it off. It tells you that the market believes Gulf supply and China's stockpiling are enough of a buffer to absorb this for now. But if that next week threat actually gets carried out, so who knows if we're going to get that or we're going to get another taco here. But if it gets carried out, the calculus can change pretty fast. This is the single biggest wild card risk heading into the next few trading days. So let's go into the Fed. Fed interest rate hike July odds fall below 17%, which is good. So story number two, the Federal Reserve under new chair Kevin Warsh, the Fed's own dot plot from the last meeting was surprisingly hawkish. 9 of the 19 members are penciling another rate hike for this year, even as inflation has cooled for 2 straight months. So it's real tension, and the bond market basically ignored the hawkish dots today and rallied anyways. betting that the Fed follows the data instead. Going into earnings and tech. On earnings, it was a strong day. BlackRock jumped 5% on a record $15.3 trillion in assets under management and its best profit margin in almost 5 years. Morgan Stanley also posted record trading quarter. Chip equipment giant ASML raised its full year guidance for the second quarter in a row, which is a strong signal AI infrastructure spending is not slowing down. But the real headline was in Apple. So shares jumped 4% to a brand new all-time high after China approved Apple's intelligence for the Chinese market. So integrated with local partners, Alibaba and Baidu. So that plus a record 20% global smartphone market share has Apple up about 20% year to date. So here's a part of the market that's kind of confusing right now. So chips are sending opposite signals at once. ASML, the equipment maker, is raising guidance, which says that AI capital spending is alive and well, and memory chip makers are getting just crushed. So Micron dropped another 8% today. SK Hynix, SanDisk, and Western Digital all fell also. So it's extending the memory sector sell-off that started this week on week next generation memory demand guidance. So the AI infrastructure build out looks fine. It's specifically the memory chip pricing story that's breaking down, a distinction worth understanding before you lump all of the semiconductors into one trade. So let's just get into the winners and losers here. Winners and losers: BlackRock, Apple, Amazon, Alphabet, Microsoft. They all had strong days today. And on the losing side, we see a lot of memory stocks and a lot of memory companies. So we see Micron, SK Hynix, SanDisk, Western Digital, and SpaceX, which in SpaceX particularly, which closed below its IPO price for the first time since going public just weeks ago. And what are we going to watch tomorrow? What's important for tomorrow? So 2, retail sales and customer sentiment data. So that's hitting at the same time. And 3, whether Trump's Iran threat for next week actually gets carried out. On the charts, we'll keep it simple. For the S&P, above 7,600 is the bullish continuum. Below 7,472, that is the 20-day moving average. And then the rally is in trouble. Everything in between is just noise. Let's go over to the SPY in particular again. So we can go ahead and break all-time highs here at 760. Again, we have a bullish continuum. We can look to make that higher high on the daily chart. If we then again go up, try to break out, fail, we are most likely going to come down, and then we can start looking for areas of support that were previously resistance. We can look at the 740 right here. We can also look at a bounce potentially at the 20-day moving average, which should start trending in the same direction. So we can come bounce, and that also coincides with this downwards trend line that we had drawn. Break that, we can definitely test the 50 EMA after that. So we'll keep an eye on that. So that's today's breakdown. The market rallied hard, but it did while basically ignoring an active war and a hawkish Fed, and both got tested starting tomorrow morning. If this kind of daily breakdown is useful to you, hit the subscribe button so you don't miss tomorrow's. Drop a comment with what you want covered next, if it's even not just financial advice or just what happened and what to watch. I thank you for coming by. God bless you guys all in the name of Jesus, and we'll see you later.